The next section is quite short, but is actually incredibly important. And I'm going to cut it out and put it out as a separate podcast, so it's searchable. And that's the capital cycle. Now, if you invest in any capital intensive industries, you really need to be aware of this. So, the way the capital cycle works is that for whatever reason, there is a shortage and prices go up. Companies respond to high prices and extraordinary profitability by investing in new capacity. And when that capacity hits the market, there's a glut, prices collapse, and the whole cycle starts again. Because low prices means no investment, and eventually there's a lack of capacity causing high prices. Now, we are seeing that in spades in freight. So, during the pandemic, international shipping rates went through the roof. They went up tenfold. And so, companies invested in new container ships. And you'll see this is container ships being delivered by year. And in 2023 and 2024, you're going to see a lot of big container ships hitting the market just as prices collapse, and that will cause prices to go very low. When investing in any capital intensive industry, you need to be aware of the capital cycle. In the case of freight, freight is now uninvestable because they've overinvested and rates are going to collapse, as is profitability. Now, in oil and gas, we know that capex has collapsed since 2014 and remains very low. So the capital cycle is working in favor of oil and gas at the moment. So in summary, capital cycle is really important. Low prices cause low investment, and eventually that low investment causes a lack of capacity, which feeds into high prices, overinvestment, and a glut. Now, in shipping, we're seeing that playing out in real time. Shipping is now completely uninvestable. But oil and gas, the capex cycle, is very much working in our favor. And when the world economy recovers from recession, supplies are still tight, prices will rise quickly. Richard.
Yeah, very interesting, Keith, and really important to keep an eye on. It's a little bit like the poor investment decision where you buy at the top and sell at the bottom, but only on an industrial scale. And you don't want to be an investor in that industry, buying at the top and selling at the bottom. So you're quite right. It's really important. And I think this is it's the same principle that we're looking at, isn't it, for metals that are required for the conversion, the greening of the economy. If the effectively the investment that's being made in those is far too low for the future expected demand, which is why at the right point they will be at the bottom of their capital cycle. But we need to get into the recession first, I think.
Yes.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information, nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.